Welcome to Part 10 of Sonoma County's 12-part Insurance Requirements for Contracts training program. In Part 10, we're going to discuss professional liability or errors and omissions insurance. Both names are used, and we will accept either terminology. So when do we require it? Well, I can give you some common examples. Healthcare professionals, design professionals, that includes architects, engineers, surveyors, folks who provide legal services, people who provide insurance, finance, or accounting services. Also, for example, I think at various times the county has used an outside claims adjusting service. We certainly want professional liability from them. And cyber liability, because nowadays folks that are involved in providing software or working with our computer system or have access to it, their error can lead to a disclosure, amongst other things, can lead to a disclosure of private, personally identifiable information, and we can get sued. I'm sure you all remember the Yahoo and the credit checking company. Experian, yes, that happened recently. Environmental consultants, because environmental consultants may tell us that there are certain, that ground may be contaminated and what have you, and if they do not do an excellent job, we could wind up with some serious pollution claims against us. There are other types that don't fit into any category. The question about whether we want professional liability or E&O. In fact, when people ask, is this party required to have E&O, I will usually come back at you with a question. I never answer that question. The question I come back is, if they don't complete their job, or if they do a job that's defective or inadequate, can we be subject to suits? Can we suffer financial or economic harm? Or can we be subject to fines and penalties from, say, the feds or the state? If the answer to those questions would be yes, then even though it doesn't fit into any set category, we would probably want to require professional liability insurance. This is always a gray area. I think these are the hardest questions to answer. And there are ways that you can get help. First off, on our website, there is a link to professional liability, and there's some more detailed discussion about when it might be required and when not. And you can also send a help request. What you shouldn't do is guess. And a lot of times we don't know, and it will be with back and forth between risk and your department to try and figure out what exposure we have if their rendering of professional services is inadequate, and then we can decide. Now, earlier trainings, we talked about how general liability insurance works. Well, errors and omissions and professional liability are a little bit different. They function differently. The first thing is that their primary focus, not the only, but primary focus is economic harm. Remember what we said about general liability insurance. We're covering bodily injury and property damage, but a lot of the claims against professionals or for professional services are economic harm claims that don't involve bodily injury or property damage. If your friendly insurance consultant gives the county bum insurance advice, it's not going to cause injury, unless Jamie beats me up, I don't know. It's not going to cause injury, and it's not going to cause property damage. What it will cause is economic harm to the county because there's a claim against us, and our contracted consultant should have had coverage, and none is there. So it's economic harm. The same thing would be true in many cases for environmental consultants. If the claim involves fines or penalties imposed on us by the federal government or by the states, that's not going to be covered in general liability. That could be covered under the errors and omissions or professional liability. Usually, and I'm going to give you an exception to this in just a minute, usually professional liability insurance does not cover bodily injury or property damage claims because they are reserved for the general liability policy. But, you knew there was a but coming, right? Okay, but there are certain professional liability claims that look an awful lot like bodily injury or property damage. If a healthcare professional messes up, isn't that going to look like bodily injury? Well, their general liability policy is still not going to cover it. It comes off of their professional liability. And if a design professional, architect, engineer, particularly those, do not do an adequate job, it could result in bodily injury or property damage, and that would not be covered by their general liability policy. A number of years ago, there was a city, I want to say it was Kansas City, where an architect designed a pedestrian bridge and went across the street. I guess in the winter that was pretty cool, or pretty hot actually, because it's so cold in Kansas City in the winter, and so people could cross the street on this pedestrian bridge. Well, the design wasn't real great, and the bridge collapsed, and there was major property damage and major injury. Yeah, there was bodily injury, yeah, there was property damage. That's not covered. That's really a design professional liability, errors and omissions claim. That would be covered on the professional liability and not on the GL. So it's usually not bodily injury or property damage claims, but some professionals, their failure to properly render services is going to look a whole lot like bodily injury or property damage. Now, a couple of problems with professional liability policies, which makes it very difficult to do any extensive vetting of their insurance. Number one, they're not standard. There's no industry standard for what these policies look like. Each insurer that insures professional liability, errors and omission, basically writes its own form. The language, what's covered, what's excluded. Yeah, there are some general similarities, but they really vary quite widely. So it becomes very difficult for us to ask for sample anything or to give you sample anything because they're all different. The other thing about them is that we do not require additional insured status on the professional liability coverage. There are a number of technical reasons for that, but certainly one of the major reasons is that most, I say most because there are exceptions, most professional liability carriers will not do it. So there's no point in asking to be an additional insured on an architect's policy or on a doctor's policy because you're not, for professional liability, you're not going to get it. And I could also tell you why, well, I'll give you one example of why we might not want it. Many of those policies exclude insured versus insured litigation. In other words, the coverage is there if an outside party sues, but if one insured party sues another party, it may be excluded from the contract. Well, if they've made us an additional insured, guess what? If we sue them, their policy's not going to provide them with any coverage. No, thank you. So, and there are some other reasons. That's the basic idea. So we ask that they have coverage. We do not request additional insured status for professional liability. Another quirky feature of errors and omissions and professional liability policies is that almost all of them are on a claims-made basis. Okay, so claims-made differs from occurrence-based policies like general liability. You may remember in the general liability training session, we were talking about bodily injury or property damage. And you might remember that we said it is covered if the injury or damage happens during the policy period. You might remember that? That's not true for claims made. Under a claims made policy, the important date, and the fancy term that the insurance people use is coverage trigger. The important date is the date on which the claim is made. Now, every professional liability policy, every claims made policy defines making a claim a little differently. I'm going to give you a generic definition. It's kind of your basic rule of thumb is when the demand for money is made. And understand that that's a real simplification. Some of them could go on for a paragraph and a half explaining what constitutes making a claim. But I'm just going to shorthand it as demand for money. So let's think about this for just a minute. We hire an architect. The architect designs a structure for us. That work happens in the year 2018. The structure is built at the end of 2018. Yeah, I know, I'm compressing the time a lot. And then there is, after the structure is complete, there is a problem with it, and perhaps the following year or the following 2 years, we can't use the structure. The design doesn't meet code, or there's something fundamentally wrong with the design. We would have some claim against that architect or engineer. When are we going to make the claim? Not when they did the bad service, right? Because we didn't even know it was bad. But it's when we find out there's a problem, and then when we find out there's a problem, we may not even put them on notice or make a demand for money until several months after that. The triggering event in a claims-made policy is the date on which the claim, however the policy defines making a claim, is brought against the insured. What does that mean? Well, that means that if they're doing the work for us now, the likelihood of a claim being made against them is going to be a year or two or more down the pike. You're going to notice then that in our templates, we always require them to have professional liability when it's appropriate and to continue it for some number of years after the work is done. That's the reason, because the likelihood that there's going to be a claim made against them is not going to be in the year when they did the work for us, but at some time after. As we said in a previous training, with completed operations coverage under general liability, we can write in the template that they have to continue their professional liability insurance for 2 years after, you cannot get evidence of that. There's no way that you can get documentation of that on the front end, because policies are issued usually for a year at a time. I also want to point out that claims-made policies have another little wrinkle that we see only in them, and that is something called a retroactive date. And essentially, the retroactive, although the policy responds when the claim is made, the policy also says that the service or the wrongful act has to happen no earlier than this specified retroactive date. Now, I don't think it's necessary for us to go into the whole rigmarole of what that does, but you will notice that a lot of the templates that require professional liability ask that the retroactive date be specified on the certificate of insurance. We just want to make sure that that the work is done after the retroactive date. And I know that's a little confusing. So essentially, we require insurance to be carried after the work is done, but we want to make sure, really, you know what the retroactive date is? It's really the first day of their first claims made policy. And when they renew it each year, it stays the same, or it should stay the same. We just want to make sure that that retroactive date, the first date of their policy, is not after they started work for us. And we just ask them to put that on the certificate of insurance. And speaking of certificates of insurance, there is no specific place on the certificate of insurance for professional liability. There are a couple of blank boxes, and they put it in all kinds of different places. So you might have to go hunting for it on the certificate of insurance because they don't put a formal place for it. I think I'd want to mention one other thing, and that is we mentioned cyber liability earlier and the possibility that people who do work for us relating to software or our computers, their work that is not up to snuff could result, probably the biggest risk for us would be in a release of private information. We have in our consulting templates, the ones that require professional liability, which are template 3 for corporations, partnerships, limited liability companies, and 4 for, no, I'm sorry, that was 5. I got the numbers wrong. In template 5 for corporations and partnerships and limited liability companies, and 6 for sole proprietor consultants. Yeah, that's more what you expected to hear, I know. We have amended the language recently so that under the professional liability requirement, it specifies that if their services involve access to personally identifiable information or software or other computer things. In other words, there's an exposure to a leak of personally identifiable information, then their professional liability must also include cyber liability. And that's, you don't need a different template, but it's built right in there and specified. And if that is not appropriate to the service, then they don't have to apply it. They don't have to include it, and it's not required. So we've kind of done it so that you don't have to do a whole lot of extra work to include or exclude the requirement in a consultant's contract. To what extent do we check the cyber? My feeling on that is that if the work, the scope of work, includes this computer exposure, that somewhere on the certificate of insurance they should give you an indication of cyber liability. Now, if the whole contract is about computers and software and hardware, their professional liability is going to be cyber liability. But we have this exposure that kind of goes in tandem with some other exposures. For example, we have some, I'm pretty sure Human Services Department has some contracts with not-for-profits who work with clients, and the kind of work they do requires professional liability, and they also have access through computer hardware and software to personally identifiable information. For those people, we would like to see errors and omissions and also an indication of cyber liability, because they've got both ends of it. Any other questions? Comments? Jokes? War stories? This concludes part 10 of Sonoma County's insurance training program.